What's up, guys? It is Friday, October 21st. It's 9:09 a.m. I'm standing up because I cannot fathom sitting anymore. So let's dive into the market update. So first, we're going to start off with the 10-year yield bonds. And what we're seeing right now is that playing out, that scenario where we said we break over 4%, we go to 4.25%, 4.4%, and that's what we're seeing. So if we go to the 6-hour chart, you can see that we've been on a constant grind up. It looks like we might be setting like a kind of parabolic top at the moment, local top, something like this, where we really break away from going like linear. So like say like something like this, like that's like a linear line, but then we kind of go parabolic, then we snap back down. And even like if I drag this out, you can see that that's exactly that same trend line where we hit. So we're finding some resistance there, which is good. We don't want to go crazy in the bond yields. That would spell a disaster. So this is good that it's kind of finding some resistance right now. Maybe we'll pull back down, retest 4%. But as long as it's staying stable and it's not going out of control, that's good. Now we can look at the dollar, 113.11 right now. I'm going to go to the 4-hour chart. And we did a double retest of that 786 that we've been watching. So let me take this. I can put this Fibonacci retracement from this top to this bottom, stretch it out. And you can see that we had tested it back here, got rejected, came down, and then we found our way back up to it. And right now it's looking like we're getting rejected again. So that's good, like a double top. Yeah, usually this is a topping kind of pattern candle as well too. So now we're pulling down. You can see that we were kind of hanging off a cliff earlier this morning, and that was because the dollar was breaking through that 786, but then we came back down. So it was a fake breakout, and now we're seeing the momentum indicators crossing down. If I go to the 6-hour chart, yeah, we just want to see follow through, come back down today. We want to break now through from this low, this high. We want to come back down and break 112. That's where we want to stay below. So by the end of the day today, I would like to see us come down, break 112. And then that would bring us on the daily chart, a long wick on the top, and then a big red candle down here. And then for the weekly, that would be great because we'd have a long wick on the top and we'd have and it would be a red candle. And you could see that we would push up. And then a lot of sellers came in pushing us back down. Something like this, we would see this red candle right here, which is good because that means that this is a heavy area of resistance and it's likely we would pull down more. And that would be good for cryptos, especially where we're at right now because we're hanging on the edge. We need to see the dollar pull down. So where we're at as far as the dollar, we want to just maintain below the 114. We break through 114, it's going to go rapid. So watch that level. You can even set an alert. Then let's go to Bitcoin. And right now we're on the 12-hour chart and we're looking at the pink Fibonacci moving average. It held that support for this bottom back here. And I'm going to hide the void. Actually, no, I'll keep the void lines up. But you can see when we came down for our bottom back here in June, that's where we touched. And then this whole time we touched as support. And sometimes we pierce through it as long as the next candle after it comes back up and hold it as support. So this morning we sold off all the way down to like 18,660. And then right now we're back up to 18,930. And where the pink Fibma is like 18,950. Preferably, I want to see us get back above 19,000. That's that key level that we need to hold above. And then ultimately 20K. And we can see if we go to the 4-hour chart. So if we can reclaim that pink Fibma and then the next 4-hour candle maintains the body above it, then we're good. Then that's likely the bottom that was just put in. Usually this whole time when we've had a sell-off down to the pink Fibma and got back above it, usually we come back down to retest those same levels. So we never came back down to retest these levels back from here when we got the CPI data. So maybe this is fulfilling that need. And now we can finally ultimately get out of here because there's not much time left. Like you can see this trend line that stretched all the way back to here, and then this one right here, and then the pink Fibma. So we're coiling up, we're converging. So there needs to be a big move. It's good that we're getting a buyback right now, but that doesn't mean that we can't sell off again. So we need to be on our toes. It's Friday. And so we're at a critical time point right now, especially the 18th to the 23rd I found of every month. Usually we found a market bottom, and then by the end of the month to the new month starting, we find a recovery, and then we start a new rally, and then it repeats. So now it's the 21st today, so it's looking good as far as this being a bottom, and then we can start a recovery to end off the month, and then maybe November we just really get out of here. So that's good. And now let's check the weekly chart, and we're still green in the MACD. We can see this risk indicator is for the first time ever in red. So like traditional markets are very scary at the moment. You can see extreme risk. So yeah, that's what we're watching. The stock market, NASDAQ 100, we're on the 3-day chart, and we're trying to see some momentum pop up here. We're seeing some hidden bullish divergence with these lows, higher low, low, lower low. We're seeing some long entries come in. We need the vertical blue line for our buy now signal. So we don't have that yet. Let's go to the weekly chart. And the weekly is trying to get a cross up on the stock RSI, the MACD. We're seeing a hidden bullish divergence, low, higher low, low, lower low. So hopefully we can get on out of here. Now let's go to, so we're going to go to XRP. And I'm going to go on the 4-hour chart, and we're really below now. We flipped the trend on the kind of medium time frame to bearish at the moment, because we have the EMA ribbon now red, and it's serving as a resistance point. So for us to get back in the short term, medium term bullish, we need to reclaim like 48 cents, 47.5 cents, get back above the 200 moving average, 50 moving average, and the EMA ribbon right here. If we can get back above, hold that support, then we're good to keep rallying. Until that point, we can say that we're not good to really get out yet. We have a convergence on the 6-hour chart coming from these moving averages like that. And so like that support would come in around like 42 cents, 43 cents. We're hanging out at like 0.444 right now. And if we go to the 12-hour chart, we have the 12-hour prepare to buy soon, the 6-hour, the 8-hour, the 9-hour. So like multiple Stargate signals are coming in saying that, hey, we're oversold here. It's probably getting ready to be a good time to buy. We're just waiting for that vertical blue line to know, all right, buy confirmed. So that's what we're watching. And then, yeah, we got the 42 cent area as that support, which is these prior lows right here. And it looks like maybe some people are saying that we're breaking down from a head and shoulders pattern. I find that usually with head and shoulder, like something like this, like there's a head and shoulders pattern right here. It's like a fake breakdown to pop back up. And usually I think head and shoulder patterns are bullish in crypto for some reason. You usually see that play out where it looks like it pops through. Everybody thinks it's going to play out, and then it pops back up. So let's go to the daily chart. Daily chart's holding support on the 250 moving average and the last leg of that EMA ribbon right there. We want to see that. And ultimately, we want to come back up and get above this yellow line here, which is around that 47.5 cents. And then we want to see the momentum start to shift back to the upside. It's good that the TSI has not gone down into the negative territory. It's still maintaining above the zero line. So we are still bullish. We just need to see the price follow up with that. Then let's look at XLM. Right now, it's hanging out at these lows. This was a key area, like where it's at, like around 0.107, where we found a lot of support, where we break down below resistance, 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 then we get above. Then like we found support here, and now we retested that same support. And it looks like we're having a nice green candle to get us on out of here. So that's what I'm seeing. We need to get back above for XLM to go bullish in the short term, like 0.113. That will get us going. On the hour chart, so if we're looking at like the daily stuff, you see the MACD curling in, TSI, stock RSI heading up. So it does look, and the prepare to buy soons. So it does look like we're going to see a recovery, but it's very low time frame. So we have to look at the bigger time frame to see the bigger picture. And we need to see these indicators ultimately cross back up to see some momentum to the upside. Until then, we won't see that. So yeah, critical level to hold is right that 0.107. We can take this low, this high. And if we break down below that, the next one we got to definitely hold is like 0.1047 for sure. So that's what I'm seeing. I will keep you guys updated if anything emergency happens in the charts. and I'll be doing newsletters. So I'll see you in the Discord. If you're not already in it yet, go to the description, click the link, and we'll get you going in there.